Good day, everybody. Welcome back to another episode of Master Forex Traders. This is a market review, market commentary, and market analysis. So, before we start, please like, share, and subscribe to our channel, and of course, comment. Now, here is a NASDAQ 1 hour time frame. We are looking at post US elections. As you can see, we had a rally up since from the beginning of November 1, or you can say since the end of 31st October. So this November we have been having a smooth up movement. We've been having a smooth up movement. So here you can see we had highs and lows, highs and lows, highs and lows. Now we have just printed a new higher high on NASDAQ today. We have just printed a new higher high on NASDAQ today. So my expectations from NASDAQ, the US dollar is obviously strong, and I'm expecting new highs, maybe on dollar, not the higher high, new current highs. As you can see, US dollar it's going hand in hand or same directions as indices. Therefore, I am expecting a little bit more new highs on NASDAQ. So it is going to be difficult for new students to trade on such conditions because of Donald Trump administration is about to hit the office, and of course markets are unstable and highly volatile. Of course there will be new policies and renewed policies and terminated policies during Trump administration. Technically, let us check how are we potentially going to trade NASDAQ this week. Let's go to daily time frame. Never mind the current trade, and please do not take it as a signal. Do not take it as a financial advice. Whatever I am doing here, it's for educational purposes. So you can see we had a previous high here which has been taken out. This is a previous high. It has been taken out. Hardly it was smashed so hard. You can see these three powerful bullish candles smashed through and closed above this previous high. So now what do we have here? I am not suggesting that the market will crash, guys. I am not suggesting that. It's just my technical analysis. But I would find it difficult for NASDAQ to reach this low. And of course, the price rule is that there is no higher price to go higher, and there is no lower price to go lower. Now, if markets were to crash, I'm not saying they are going to crash. I'm saying if they were to crash, I was definitely going to look for this price line here, which is 17238.97. I was going to look for that price there. Why? Because there are a lot of sell stops below here. As you can see, the buy stops are being taken out here. Those, sell stops are being taken out here. Sorry about that. Here they are buy stops. Those who bought NASDAQ here, their stop losses are here. I'm talking about big institutions here. Big institutions, major big investors. Their stop losses are here. They bought here and their stop losses are here. Those who sold here, their stop losses are already been taken out. And there are those who even sold here, wanting to trade resistance. Their stop losses are being hit right now. So I will at least expect the market to retrace 50% of this move here. At least, if it's not willing to crash, if the market is not willing to crash, I'm expecting it to move 50% of this I will call it elections rally, of this US elections rally. I will expect market to retrace at least 50%. Now, how do you see your 50%? How are you going to measure your 50%? Go back to the lessons I have taught you that there is a powerful tool we call Fibo. Nash retracement. It can help you to measure your 50%. How do you use your Fibo? You're taking it from a previous low and to your current high. Your 100% at your previous low and your 0% at your current high. So your 50% will be much more here. Will be much more here. As this candles goes up, let's say market doesn't retrace exactly here, and this candle, today's candle, decides to go up, you adjust your Fibo. You move with your Fibo. You move with your Fibo. You move with your Fibo. Take your Fibo to your new higher high. Take your Fibo to your new higher until market retraces. If it doesn't want to retrace, it doesn't want to retrace. There's nothing you can do about that. You do not pick a top. I'm not trying to pick a top and say market will retrace here. No. They are things that are signals to us that the market is now trying to retrace or trying to turn. Go back to the lesson number 5, where I told you that the price is fractal. Well, now let's drop to lower time frames. Let's drop to 15. As you can see, 15 minutes. Today we open up with this gap here. This is not support and resistance line, guys. I do not trade support and resistance. So these lines are basically they represent the opening and a closing price here. Opening and a closing price, which is a gap. Right, let me set it straight. This is a closing of last week's Friday. Last week's Friday, we have this closing price here, and this week morning we opened with this price here. See, there's a gap here. So these lines are basically representing the low of the gap and the high of the gap, closing and opening. Simply as that. Now you can see I have placed a sell position here. Yes, this is not a signal, this is for educational purposes only. We have a potential of a sniper right there. Where is my target under this time frame? I'm expecting at least the market should close this gap here. It can do it anytime. It can even not do it today or tomorrow or next week, but on a normal trading days, price tends to close this gap just like this. Understand? So I'm expecting a move down to close this gap. This is what I'm expecting from today's price action. Now let's drop to lower time frames. On your lower time frame, 5 minutes, you can see we still have our opening ranges. We have a slightly smoother structure. We have this move down here, and we have this retracement here. So I entered because of this retracement. Now let's drop to 1 minute. On 1 minute, you can see that we have a clean. Let me reduce a little bit. Perfect. On 1 minute, you can see we have a clean shift of market structure. Okay, let me zoom. Perfect. We have a clean SMS here, which stands for shift of market structure. If you don't know anything or it's your first time watching my videos, please go back to the lessons and watch all the 5 lessons. I promise you, your trading skill will be on another level. So here is our SMS. We have our SMS. This gives us a signal that the market is willing to go down. On a normal day, of course, market will go down. But remember, nothing it is promised. Markets are highly volatile, especially on this time presidential transition. Trump is about to take over the office. Actually, he is taking over the office, so the market will obviously react on that. It's highly volatile. Nothing is promised. Laws of price action are usually being broken. Price tends to break its laws on these very special times. Now we have this SMS here. What do? We wait for retracement. You can see market came down, creating highs and lows, and we have this retracement here. Now people will say, hey, but this one is also a shift of market structure. Why are we not buying? It's fine, you can buy, but we have a bias right now. Remember, our bias is to close that gap. So we are following any signal that can give us a sell sniper entry opportunity. Hence, we are selling instead of buying. Yes, we could be wrong. Those who buy here, they can be right. We could be wrong. But we have a bias at least. These ones are buying for new higher highs. It's fine. That's their bias. And we are buying for closing the gap. On normal days, remember, these are not normal days. The gap, it's been closed like this. If you sell here, market drops and go close the gap straightforward. But these are not normal days, guys. So we expect disappointment. We leave a room for disappointment. Now people will ask me, so where's your stop loss? My stop loss is right here. I'll put my stop loss here on new highs. My stop loss would be there on new highs. My take profit where the gap is, or the 50% retracements of the daily candles. So this is how I see NASDAQ so far. I'm expecting a little bit of retracement. If it doesn't retrace, it's okay. We'll catch another sniper entry. So that's it for it today, guys, on NASDAQ. Thank you for watching. Please share, like, and subscribe. Comment, of course. Please be safe.